Hello, everyone. I hope you have all had a wonderful weekend. As we go into the market on Monday, or as we go into Monday's session in the stock market, we need to review Friday's session, and we'll immediately notice that the volume was gigantic thanks to options expiration. However, we were only down 0.39% on the NASDAQ. So overall, an excellent day of pulling back. We are still well above the 50-day moving average on that index. Russell 2000, the exact same situation, down 0.23%. Well above the 50-day moving average. No harm, no foul there. Volume on the New York Stock Exchange was absolutely gigantic. One of the heaviest since 2011 when we were going through that whole volatile period. And overall, while the chart looks kind of ugly with the red bop, the S&P 500 is fine, still trending above the 50-day moving average. The Dow Jones Industrial Average also, while an ugly bar, and if this bar, let's say this bar happens without options expiration, oh shit, we're going to start having to make some sells to force rooms for some hedges. However, it's options expiration, so this volume is nothing to be concerned about. The most important thing is we are still above the 50-day moving average, and that is my line in the sand. Now, we did have some sells. MHGC is actually closing at 669, barely closing below the August lows of 670, and that will eliminate that long position completely. RNA, while we have a gain in it based on where we enter the trade in the morning, this chart pattern's really messed up, and I can't trade off of this. So since there's so many high quality stocks out there that don't have this going on, RNA is a full sell right after we bought it. Hey, at least we're leaving with a small gain. And Caterpillar, the failure at the 200-day moving average and the close ever so slightly below the 50-day moving average on this huge volume makes CAT a 100% sell. LinkedIn is closing below the 20-day moving average before producing any gains. That makes that a 25% sell. CGG, even though its uptrend's fine, it's above the 50-day moving average. At 25.09, it is closing below the low day of 25.13, so it is a 25% sell. And LGF, another heavy volume close, this time below the 50-day moving average. 2 days ago it was the 10, then the 20, now the 50. LGF is a 50% sell. A heavier volume sell-off below the 33.34 level will leave that as a full sell. We got some long signals. We got an add signal in XOOM. XOOM is breaking, actually technically it's breaking out of a cup pattern. On a short-term daily chart, you have a cup with handle pattern breakout here. But either way, you've got a breakout to new highs. I'm going to go with the weekly pattern, the base on base, cup pattern, base on base, as you can clearly see. Whoa, what am I pressing? Just pressing buttons randomly. It's a good thing the video didn't die. And so as you can see, very powerful chart pattern. Also, GNC is making a pocket pivot point buy signal off the 50 and 10-day moving average on above average volume, closing at the high a day, so I like that a lot. And I just happened to buy a product from GNC on Friday, so makes sense. And then ACRX is a new biotech long, beautiful Zoom 3 chart going back to November of 2012. Plenty of accumulation on the uptrend. This current consolidation is coming on extremely low volume, and now we have yet another pocket pivot point within this base, third one, and this time it's closing above the 50-day moving average, and it's got a little surge in green bop. So ACRX is good. All these positions, XOOM, GNC, and ACRX, are 2% and 2%. Okay, everyone, I'm going to go and wrap it up there. Have a great upcoming week. Aloha.